how do you see this day shaping up? Midterm elections expected to have some impact on the markets. We just had a guest on earlier today that said there's a 90% chance that Republicans are going to win both houses. How do you see things?
You know, it's an interesting call. Anytime we have these elections, you get so burned out on listening to them, you're just glad when they're over. But yeah, I think that the Republicans got a very strong chance to take the House. You know, we'll see what happens in the Senate. Will it make an impact on the market? Yeah, probably it will. I mean, let's face it, the past 2 years haven't been that great for investors and for anybody as a whole. So yeah, there's going to be some opportunity, I think, coming out of this, but I would still be very, very cautious. The trend of the market is still negative, and there's still a lot of headwinds ahead of us. So caution should be your key word today, even with the new elections that are going to take place today.
Well, Vance, really quick, you said the last 2 years. I think it's more been like the last year. 2021 seemed to be a pretty good year,
Yeah.
wasn't it?
Well, that's true too. Yeah, that's correct. I would say the last year has been pretty tough, but it has been pretty hard on folks. But it has created a lot of opportunity. You know, the trend of the market's down. Our proprietary indicator, the HCM byline's down. So until that changes, you know, caution should be the word of the day. You know, when you look at different ETFs, and I was looking at one the other day, like Bill, the 1 to 3 month Treasury. That's just a notch above cash. But they've had massive inflows. You know, billions of dollars have come into that ETF. So there's a tremendous amount of cash on the sidelines for opportunities that'll present themselves. But you know, this election, we get it out of the way. We start to see if we get some changes that may be made that may be positive for the economy and for the headwinds that we're facing right now. So we'll see what happens. It's going to be an interesting day, an interesting horse race as it always is.
Yeah, interesting might be a euphemism for this day today. So it sounds like you're of the mind that gridlock in D.C. with Republicans controlling Congress and a Democratic president was going to be potentially good for the markets. I want to talk to you about your portfolio and how the midterms might change it. Right now, you're in a 60-40 portfolio, but certainly not the traditional one. Your 40% is cash.
Yeah, we are. We're very heavy in cash. Like I said, you know, the HCM byline is negative, which is our trend indicator. It's negative. I'd be very cautious. Don't fight the trend. You know, they always say don't fight the Fed. Well, the trend's down. Don't fight that either. And I would also be very, very cautious of being dogmatic of when you want to re-enter the market, because the trend will change. And that's going to be a very big indicator of when you want to start to take trades again, whether it's Microsoft, Apple, even, you know, big stocks like that, or if you want to roll back into tech. You know, I'm real cautious too. Be cautious on other manager and big banks. These big banks have been coming out with a number of where the market's going to go to. Well, I can tell you, they don't know. Nobody knows the answer to that. So the trend is critical to this. The trend is down, so be very, very cautious. But there's a tremendous amount of opportunity. Some of these stocks have been truly beaten up. And I mean, I think if you invested in them right this morning, even though we're sitting on a lot of cash, we'll still sit on a lot of cash till the trend change. If you bought them this morning, I think you'd be really happy 2 to 3 years out.
Hey, Vance, really quick, I want to explain the HCM byline. This is your company's proprietary quantitative investment indicator to determine when you should be in or out of the market. It's got one of those R's with a circle around it, so you like a registered trademark, I'm assuming. I just want to explain it to the audience. So you're saying that trend shows you need to get out of the market at least right now this morning, right?
You need to reduce exposure to equities. There's no doubt about it, because you're fighting the trend. The trend is negative right now. The short, the intermediate, and the long-term trend, all three are negative.
Okay.
So when you're fighting that trend, you're really fighting a lot of headwinds, and the odds are not in your favor to win. And you got to take the emotion out of investing. Everybody gets so emotional about it. When the trend's negative, take some money off the table. And by the way, cash isn't a bad thing in a bear market.
That's true.
Cash is a wonderful thing, because some of these stocks like Meta, my goodness, you can pick them up on, you know, pennies on the dollars now, and they're not going to go away. Meta's not going to go out of business. They may change their business model, but some of these are just terrific opportunities for long-term investors.
All right, Vance, well, I got to let you go in just a second, but one last word. What's the one sector that you think people should be invested in from now? It's obviously before the midterm elections throughout the end of the year. Which sector are you the most bullish on?
I would play it with an ETF like DVY. I would play the high value, high dividend paying stocks right now. They're holding up better than anything else. But I got to tell you, the first or second quarter, if the trend changes, technology is going to be a roaring buy.